Welcome to DLuxuree, the channel for the top 1%. This video will help you to identify the most common money traps which keeps the majority of people stuck in the rat race. By avoiding these traps, the probability of you having a better financial life increases. Number 1. Lack of knowledge. Elizabeth Warren popularized the 50-30-20 budget rule. This rule instructs us to allocate 50% of our income on needs, 30% on our wants and 20% on our savings. To invest some of our savings is a smart choice, but to know where to invest is smarter than to invest in some random mutual fund. For example, if you invest 10,000 rupees for a period of 10 years, 8% CAGR will give you 21,589 rupees. Whereas just a 4% increase, that is 12% CAGR, will give you 31,058 rupees. Tripling your principal. Number 2. Timing the market. No one in the world has ever been able to say the exact top or bottom of the graph of the public markets. Many people wait for the recession to end for buying of stocks. But the rich do the exact opposite. Let me ask a question to our viewers. When do you go for shopping? When the items are overpriced or when the item are on a sale? The rich do the same for investments. Number 3. Tax planning. Tax planning means reduction of tax liability by the way of exemptions, deductions and benefits. Tax planning in India allows a taxpayer to make the best use of the various tax exemptions, deductions and benefits to minimize his tax liability every financial year. The amount saved from taxes can be used for your materialistic desires. How about a nice vacation? Number 4. Buying liabilities. If we simplify the definitions, an asset is anything that puts money in your pocket and a liability is anything that takes money out of your pocket. For example, you bought an expensive DSLR. If you use it for your personal purposes, it is a liability. But if you have a job related to photos or you have a studio, then it is an asset as it is putting money in your pockets. Number 5. Cursing jobs. Modern-day financial gurus advise every young individual to start something on their own. But if we check the facts, 90% of businesses fail as they are unable to generate profits, and a good-paying job is guaranteed good money. The thing is not about jobs versus businesses, it's about earning the paper to survive and plan a better future. Number 6. I'm not interested in money mentality. I have only one question for the people with this mentality. That is, why do you spend 2/3 of your life for money if you are not interested in it? And finally, the main mistake you can currently make is not subscribing to DLuxuree for such high-value content.